Okay, well, welcome back, and we're in Module 10. Going to shift directions here just a little bit and start talking about customer accounts. It's very important because the customer account is it's basically where you build the foundation for the suitability of what it is that you're going to recommend to the customer. It's where those assets are held, and it's also a place that were it not for certain restrictions, folks could do just really bad stuff. I think back to September 11th of 2001. You know, what happened was that we passed a law that we'll talk about it's designed to have the net effect of stopping terrorism to the degree that we can. But you know how you stop terrorism to the degree you can? You cut off their money. They don't have any money, they're not able to do anything. So you hit them where it really hurts, right in their pocketbook. Left unregulated and unchecked, the terrorists would take over. But that's why we have to do what we have to do to be vigilant and to make sure that we do the right stuff. One of the many reasons. But what will happen is that we've got a new account form, and again, all this stuff is on computer these days. So just when I talk about a piece of paper, give me a break because it's all on computer. But that new account form is going to require lots of demographic information, and again, after 9/11, we require even more than we used to. So we've got to have a name, got to have a social security number or a tax ID number. So if it's a business account, we'll need that tax ID number. We'll need a physical address. Yes, you can have a P.O. box, but you got to have a place as well. Okay, so anyway, it's just the date of birth, whether or not the person is of legal age, some contact information, how that account was obtained. You know the guy, how long? Does it walk in? Have you ever met him before? You know, so all that stuff comes into the big picture of basically just making sure that we're not using these securities accounts for the wrong purposes. We need to have confirmation of identification. You got to show that ID. Now, what happens if somebody says, well, you know, I left my driver's license at home. Really, how'd you get here? Well, I drove. Oh, really? You want me to call you a cab? No, I'll just drive back. Wait a minute, Bubba. Something suspicious going on here, right? What is it you see in the airports? See something, say something? Yeah, same thing here. That's going to be a suspicious activity if someone for some reason refuses to do reasonable things. We'll talk about that in more detail a little bit later on. The employer, whether they're employed at another member firm. Now that's very important because although it's okay under, you know, for employees of this member firm to have an account over there, you can't do anything in secret. Okay, that's the worst thing you can do is to try to do things in secret. And it requires financial information for suitability purpose, including income, the tax bracket, net worth, and of course net worth is the total assets minus total liabilities. That's the net worth of an individual. You also should consider liquid net worth, because if all of their assets are tied up in their house, then they may be cash poor, not have those liquid reserves handy. And their objectives. Again, just very few objectives. We talked about those earlier, but they may have a blend of several different objectives. That's okay. Just make sure that it's noted. And accounts for non-natural persons, like I say, it's going to require comparable information. It may not be exactly one-to-one correlation, but because a non-natural person is not going to have an employer. Okay, that's fine. But you know, is it associated with, or is it a business? Then we'll need to know that. And then cash accounts require no customer signature. Now, remember that there's a difference between a cash account and a trade for cash. Okay, a cash trade is settlement date of T+0. I pay for everything today, or I deliver my stuff today. We actually make the swap and it settles right now, today. But a cash account, the opposite of a cash account, well, opposite of cash trade is a regular way trade. The opposite of a cash account is a margin account, where in a cash account I have to fully pay for something by the Reg T deadline. A margin account, I can buy something and borrow half the money from the broker-dealer. So like I said, keep those terms separate. Cash trade can be done in a margin account, okay, or in a cash account. But a cash account, I cannot do any borrowing. All right, so it requires no customer signature. That's a real good probability for a test question. Okay? Now, there are thousands of forms that require customer signature. IRA adoption agreements, margin account agreements. If you've got a joint account, the joint account agreement, but just a regular plain individual cash account does not require the customer signature to go with the flow. Again, operate in test world, okay? And it does require the signature, though, of both you, the registered rep, and the principal. Now, this is the first time I believe that we introduced the term principal. That's your manager, and the manager is not called a manager, though, because they actually, when the manager accepts something, it's actually the broker-dealer, the member firm that's accepting. If the principal says something, then that's what the firm says. So the principal actually acts on behalf of the firm, and it's as good as a firm, the company acceptance, if the principal, the manager, signs off on it. Okay, so that's why they're called principals rather than manager. They are managers, but they're called principals. All right, so then we have several, you can have an individual account, and we have several joint accounts, and the joint account types we have are joint with right of survivorship, tenants in common, transfer on death. Those are three of the most common that you've got. So let's look at these things, okay? You've got a joint with right of survivorship, JTWROS. All right, and so what you've got is that you've got Bob and Sue, and what happens is that if one of them dies, then those assets, if it's Bob or Sue that passes away, then they're re-registered in Bob's name. If it's Bob that passes away, re-registered in Sue's name. So whoever the survivor is, they have that right of survivorship, and it's re-registered there. You also have Bob and Sue, tenants in common. Now what happens if Sue passes away in this case, then Bob's portion is re-registered in Bob's name, and Sue's portion goes to Sue's estate. And I drew my boxes of different size on purpose because you can have 99-1, 1-99, any, I don't care what kind of split you've got. Whatever the split is, that's the way that things are split up after the one's death. Okay? And that's tenants in common. Partners will use this a lot, or folks who are in business together will use it quite a bit. And then you've got also the TOD, or transfer on death, okay? So this is Sue, TOD to Bob. Now, first question, is Sue alive? Yes, she's alive. So how much of that does Bob own? Zero. Nada. Can Bob make decisions? Well, can Bob make decisions on something that's not his own? No. It's going to be mine one of these days. Yeah, but one of these days ain't here yet, buddy. Okay? You have no evidence of ownership. I'll tell you what a TOD account is, okay? You remember how Aunt Millie, she was your favorite aunt, right? But she passed away. And when you went into her house and she had taken masking tape and she said, I want Sally to have this. I want Jimmy to have that. Put it on the back of this and the back of that. That's what a TOD designation is. You think Sally and Jimmy could have come in and just taken that stuff? No. As long as she was alive, it was hers. But then when she passed away, she said, I want it to go here, I want it to go there. Well, that's what happened. Sue has said, when I pass away, I want this stuff to go to Bob. And it does. So those are the three types of joint accounts and what happens when one of the account holders die. All right, so other types of account, we've got corporate accounts. Now, corporations are fake people that we create. It's a non-natural person. It is a person, okay? But it's a non-natural person. So somebody somewhere that has flesh and blood and a pulse, they've got to make decisions and speak on behalf of that corporation, which has neither. Okay, so basically, we're gonna have to have a corporate resolution that we, the board of directors, are resolved that it's okay for this corporation, this non-natural person, to have this account at XYZ broker-dealer firm. If it's a partnership account, again, another non-natural person, we'll need a partnership agreement. Have that on file that says it's okay for this partnership to have an account. Fiduciary accounts. Fiduciary simply means that I've got a greater responsibility because I'm in charge of something that's not mine. So fiduciary accounts would include trusts, guardianships, administrators, executor or executrix. That's of an estate, male/female. You're not seeing that as much as you see personal representative these days. Okay, or conservator, someone to conserve the assets, perhaps of someone who has become incompetent. A receiver in the case of a corporate bankruptcy. All right, so anyway, the proper papers have to be on file. Sometimes, if it's like a couple sets up a living trust, you just need the appropriate pages out of the trust document, but they still have to be on file. Okay, if it's a receiver, they'll have to have the bankruptcy paper and the court appointing Bob as the receiver for the assets of XYZ Corporation. A lot of these are court-generated papers, so you got to have those to open up the account. All right, and cash accounts only. Now I put typically there because there are some exceptions in the real world, but we don't deal with the real world. We deal test world, and so just go with the flow. All right. Yeah, I mean the big exception is what we talked about with a living trust. A lot of times, a living trust is set up to where it can maintain a margin account. Yeah, but that's like one little corner that they're not going to concern themselves with. They're fiduciaries, they go cash. Why? Because debt, that's what you get in a margin account, that introduces leverage. Leverage introduces risk. And these people have the greater responsibility because they have charge over someone else's money. And then the prudent investor rule is what applies. So what would a reasonably prudent investor be expected to do given the same set of circumstances? I mean, are people going to be perfect that are in these fiduciary roles? No, there's just no way. And to require them to do so is too much of a requirement. So we say, look, don't try to be perfect. Do insist on being prudent. That's what you need to do. Or, in some cases, some states require these folks to only operate off of what's called a legal list, which is very, very restrictive. You've got government securities, you've got extremely high-grade corporates. I'm starting to run out, okay? But basically that's it. You're talking about very conservative investments on a legal list. UGMA or UTMA accounts. For our purposes, they're probably the same, okay? Minor differences like UTMA with the T, you can hold real estate, and UTMA you can go to like age 25 in some states before the kiddo gets it. But other than that, it's going to be pretty much the same thing for our purposes. So let's just keep them the same thing. It's actually owned by an adult, but that adult is owning it only because a minor can't enter into a contract. And you got to enter into a contract in order to buy securities or hold securities, therefore to own securities. So everything is for the beneficial interest of the minor. And it really, really is the minor's property except in name only. And that name is as custodian for. So what you've got is you've got one custodian, one minor per account. That's a good possibility for a question. And the way that those things are styled or titled is that you have the owner, the adult, the function as custodian for, the ultimate owner, the minor, and for whose benefit those properties exist, under the UGMA or UTMA of your state. Okay? So, like I say, this gives that person the right to own on behalf of whoever's going to get it. So that's the way that they're titled. Well, like I say, you cannot have joint custodians. You can't have a successor, not joint. You cannot have joint minor ownership or beneficial ownership. Okay, so one adult, one minor per account. Let's see, then the gift is, the minor's social security number is used on the account. Man, that's important because, you know, if the 1099 comes out, whose social security number is going to be on it? The minor's. So who has the tax responsibility? The minor. You know what's going to happen? Real world, dad's going to write a check if there's anything needs to be paid, right? That's not what the test question's asking. The test question is, who gets done the tax bill? It's the minor, if there is one. Okay. Then the gift is irrevocable. It's irrevocable. You cannot take it back. It's a gift, for crying out loud. Okay. And then the property reverts to the minor upon attaining majority. Oh, that's strange wording, but basically, this is the Corvette clause. Okay? Mom, Dad, great 18th birthday party. Because you know, the state of the age of majority in our state is 18. Really appreciate it. And in fact, since I'm 18 now, what I did was I went down to my broker dealer and I took my driver's license, my birth certificate, and you know that account that you guys set up, and in fact, you know, Aunt Marty put some money in, and Uncle Fred put some money in, and you're going to use it for college. You know, I decided I wanted a Corvette. So I took all the money out, went to the Chevy dealer, bought myself a brand new. They're going to deliver it tomorrow. You will not believe how good that thing looks wrapped around me. What can you tell Junior? Okay, there are two things you can tell Junior. You can say, look, if that's the way you're going to do it, you can get an apartment because you're moving the heck out of here. And you can get a job because we're not going to support you anymore. But can you tell Junior, no, you can't buy the Corvette? Nope. Nope. It's Junior's money when he hits majority. Okay? So there we go. And all gifts have to be free and clear. Cannot give a minor something that's encumbered. And the reason is real simple. A minor cannot enter into a contract. And in order, even the simplest IOU is a contract. So if you give something that has some type of debt attached to it, Junior can't legally assume that. So everything has to be free and clear. The assets then must be used for the benefit of the minor. All right. Now, the thing is that let's say that there's a special camp that Junior wants to go to because Junior's a musician and there's a summer camp for musicians. Okay? Cool. Go for it. Okay? And you know, by the way, Junior loves playing soccer. And he's got soccer practice 3 days a week. And it's all the way across town. And so what I'm going to do is I'm going to charge Junior 56 cents a mile to take him to and from soccer practice. I don't think so. There's a word for somebody who does stuff like that. They call it parent. Not just normal everyday expenses, lunch, dinner. No, that's what parents do. Okay, so yes, you can use it before Junior hits majority. But for everyday living expenses, no. I mean, what's going to happen is Junior hits majority, he's going to sue you, and he's going to win. Okay, because like I say, that's what parents do. All right, so at the minor's death, then, the assets will pass on to the minor's estate. So again, this ownership up here is strictly because of the fact that Junior cannot own it. But that's who really has the, that's whose property it really is. Numbered accounts, I've never opened a numbered account, and you probably won't either, all right? But it's okay to do so as long as, well, let's see, what do we see over here on the top of page 17, all that stuff? You got to know all that stuff. You got to know the name behind the number. You got to know the information behind the number. And you know, it's okay if it's used for confidentiality purposes, but never for tax evasion. Now, tax minimization, tax avoidance, great, go for it. Your clients will love you. But tax evasion? Oh, no, I don't think so. Okay, you're trying to skirt the rules, so never for that. And then you've got third-party trading authorizations. There's limited, there's full, and there's discretionary authority. So what happens here, okay? you're in your office and the receptionist gives you a call and says, Dan, Millie is in and she'd like to see you. Oh man, she wasn't on my calendar. You know, she always drops in, but that's okay. Gosh, I love her. She's just great. So Millie comes in, sits down and says, Dan, ever since Fred died, you know, I've just been so confused. Is there any way that I could have my nephew Billy, you know, he graduated from college and everything, and can I have him to take care of all my affairs? Well, sure, Millie. Now, what do you want him to do? And she gets one of those strange looks on her face. She says, we'll buy and sell stuff, of course. And that's all you want him to do, right? So, yeah, that's it. So, okay, well, what we'll need then is that we will need to have you sign this. This is a limited trading authorization. It allows your nephew Billy to buy stuff and sell stuff. He gives me a call. It's just like I'm talking to you. So she says, okay. And so she signs it. And so then you take it down to your principal because your principal has to approve it. And you just hit the door and she says, no, wait a minute, Dan. I forgot to ask you a question. This will allow him to take money out of my account in case he needs to, won't it? No. Let me shred this one. And we need to get you a general or full trading authorization or full power of attorney, sometimes it's called, okay? Because that will not only allow buy and sell, but also, hey, Millie needs a check, could you send her one? Okay? So, scenario 2, she comes into your office. She says, Dan, ever since Fred died, I've just been so confused. And you know, how long have you been my broker? You know, how long have you been my rep? It's been like at least, what, 10, 12 years, something like that? You know, I trust you with my life. Is there any way that you could just make all the decisions for me in my account? Well, now, Millie, are you sure you want me to do this? Yes, I am. Well, okay, I can. But what I'm going to need is a discretionary authorization. You'll need to sign it, okay? And it will give me the ability to make buys and sell decisions in your account. You said, well, now what if I need a check? Can you cut a check for me? Oh, that ain't happening. Not in this lifetime, okay? But you take it down, you get your principal to sign off on it. So what have we got? What's the overview is, if it's a limited trading authorization, it's in favor of somebody else, and somebody else can say buy or sell. If it's a full or general trading authorization, it's in favor of somebody else, buy, sell, send me a check. If it's discretionary authorization, it's going to be you or the firm, okay? And it's going to be buy, sell only, because you don't want to be able to take money out of one of your customers' accounts, okay? And nobody else wants you to. So there we go. Now, they all have to be in hand, signed, on paper. Dan, hey, look, I'm getting ready to go to the Bahamas, and can you take care of all my business for me, make buy and sell decisions for me while I'm gone? Because I'm going to be there for about 2 weeks. Okay? Sorry, no can do. Why not? Because I don't have it on file. Well, you know, I wrote out something today, and I signed it, and it's notarized, and it's in the mail. Now, let's see. The check's in the mail honest. The discretionary or the discretionary authorization is in the mail honest. They're both about the same, right? You believe it when you have it in your hot little hand. And then it becomes effective when, what's the principal? Speaks on behalf of the firm. Your principal then signs off on it. Okay? So like I say, all of those require written authority in hand, on file. In the mail's no good. They all require prompt approval by our principal. But now, begs the question, what is discretion in a trade? There are 5 different parameters to a trade, okay? And a lot of folks will call these the 3 A's, okay? First of all, what is it? A certain asset. Okay? How much? Okay. And that's the amount. And what do we do? Buy or sell. The action. If we exercise discretion over any of those three, that's discretion. But the other two parameters are when, the time of the trade, or how much per each, the price. If we exercise discretion over those last two, that's not discretion at all. Now, again, a lot of these things make great sense when you pull all of the technology out of the picture. Okay? Let's go back to the days when we only had telegraphs. And so your customer and you are in St. Louis. And it's a long way to the New York Stock Exchange. But your customer says, I want you to buy 100 XYZ at the market. So you write out on a ticket and buy 100 XYZ for Bob at the market. You take it in, and then in New York, they get that, and somebody is transcribing it, and probably they're going to send a confirming telegram back because of the fact they're transcribing it. And so you back and say, okay. And so then what do? Then they somehow or another, either telephone, telegraph, or courier, get it over the floor of the New York Stock Exchange. Then you've got the floor trader who takes it out to the trading post and finally gets to the front of the line and does the trade. How much time did that take? I don't know. What did the price do in the meantime? Gosh, if I only knew. So a market order, just by its nature, gives the firm authority over price of execution and time of execution. So that's no discretion at all. But these are. So where you'll see that is that somebody sends you in a postcard and says, "Hey, I like the bank stocks that you have. Buy me about $10,000 of the one that you think is best. Can you act on that?" No. Or the postcard says, "Buy me XYZ Bank. I'm not sure how much I should put in." No. Got to tell you shares or dollar amount, one or the other, okay? And then the third one says, look, buy me 100 shares of Bank of America whenever you think the time's right, whatever time you think the price is correct. Can you do that? Yes, you can act on it. Now, you have to do that today. It used to be that you could wait several days, but they've tightened up that rule. You have to act on it the day that you get that correspondence. But what did the person specify? They specified what it was, how much of it to buy, 100 shares, and what to do, buy it. Okay, so that's not a discretionary transaction. All right, good probability of seeing that in one form or another, or maybe both on your test. Okay. All right, so duplicate confirmations and statements, they can be sent out on a customer's request. Again, this is not giving anybody any authority, but Millie says, I just don't trust myself anymore. Can you just send duplicate statements and confirmations to my nephew Billy? Sure. Where does he live? I would take a written record of that, but nevertheless, you can do it. It's no big deal. Account maintenance statements have to be sent out regularly. Well, what is regularly? Depends. Is there activity in the account? If yes, then it needs to be sent out that month. But if no, then you can send it out quarterly. All right, and then what about I'm going to be traveling? Can you send my? Yeah, I tell you what. Can you do this for me? Because I'm going to be out of the country for 2 months. Can I just have my statements sent to you, and you hold them? Go through FINRA's disciplinary actions. Okay, this month, I don't care which month you're watching. This month, there's somebody who convinced their customer to do that so they could rip them off. Okay? You don't even want to go there. Don't even think about it. But what can you do? You can have your member firm hold their statements, hold their confirmations, hold any correspondence if it's going to be extensive travel. 2 months if it's domestic, 3 months if it's international. But any time that you have addresses changed to your address, it's because you're trying to rip the people off. Just don't even think about it. Okay, so anyway, it amazes me how people try the same stunts over and over and over again and think, oh, I won't get caught. No, you will. It's going to happen. So anyway, that's, like I say, extensive travel, 2 months domestic, 3 months international, and the rep has to keep the new account form and keep it up to date. In fact, we'll send out a confirmation to the customer. Is all this information correct? All right, and then we'll need to update it as financial conditions change. You'll need to keep a record of their transactions along with the current account statement. Now again, all these things are electronic now, but never a bad idea if you still get paper statements to keep a copy of the paper statement. But you do have to keep those. And then what happens if Bob comes in and says, you know, Dan, my nephew just joined the firm. You probably met him, Jim. Say, yeah, I know Jim. He's a good guy. He says, well, he just got his license, and I think I'd like to do some business with him. You know, after all, he's my nephew. Okay, that's fine. Let's go down and talk to the manager. Okay, manager says, oh yeah, that's fine. Is there any problem with Dan? No, he's been doing a great job for me. You know, I just don't like him. Doesn't matter why, okay? The thing is, that's all you do, just have the customer talk to the manager, makes that switch. What's the first thing Jim needs to do? Update the suitability information. Update the suitability. Make sure that you know your customer and take that first opportunity to update suitability information. So what happens when we make a trade, and you know, I don't care how careful you are, somebody somewhere is going to fat finger something at some time. That's life. Okay? Do you all of a sudden get a bargain? No. What happens is that the customer is actually entitled to exactly what happened on the real trade, or they're obligated for exactly what happened on the real trade, and we send them a corrected confirmation that says it's a corrected confirmation. And it's just Murphy's Law that kicks in that says that, you know, they get to pay less than they thought they were going to have to, or get more than they thought. But if it's a mistake, it's a mistake. You know, you do the real thing. And people make mistakes, and there's clerical error. I'm sorry, you know, if you go with what you got, the real deal is what you get, or what you're obligated for. If a customer dies, and you will see a question on this, about 90% sure or better, what do? You cancel all the open orders. Okay? Mark the account deceased. You wait on the appropriate paperwork. That's it. Your question is probably going to be structured that you just received word that Bob passed away. And one of the stocks that he has is, they've just announced some news that it could indicate that stock's going to go in the tank. What do? One of the answers is going to be sell the stock for him. No. One of the answers is going to be talk to his widow and get the okay. No, because it's a single name account. She doesn't have, we've erased it, but she doesn't have that WROS on the tail end. She doesn't own it yet. She will probably, but you don't know that. That'd be an unauthorized trade. Okay. What do? You wait on the appropriate papers from the court. Are you going to like it? No. Are they going to like it? No. Is there a darn thing you can do about it? No. Because you can't break the law. All right. So, joint with right of survivorship, transfer on death. The survivor or beneficiary provides, called the TOD, the beneficiary, provides a certified death certificate. Yeah, it does have to be certified. Some states will require other paperwork, but generally speaking, for test purposes, that's going to be good. If it's an individual account, you're going to need some will and probate papers, and again, there may be other documents that are required from your state, but just check with your operations officer to see what that is. And then the open account, okay? And a lot of times they'll just phrase this open account as if open were a verb, imperative. No. It is an account that is open at this time. So we've already gone through all the paperwork, and now you've got some stuff in it, and it's a functioning account. Customers can make purchases in any amount above the minimum in a mutual fund at any time they want to. They can redeem it any time they want to. They can make additional purchases, what have you, anytime they want to. Okay? So as long as you're above that minimum, you're in great shape. And then, so what do we do in the meantime then? Let's look at the investors' objectives and what we do with the distributions. All right? And there are only three possibilities. One of them is if I want to maximize out my current income, then I'm going to take everything in cash, both dividends and capital gains. If I want to maximize my growth, then I'm going to take everything that that fund generates and plug it right back in. Now, it's going to be taxable to me as an investor, even though I plug it right back in the backside and compound it up that way. I'm going to have a taxable event, but still it does get reinvested and allows for compounding. If I have a blended objective, what I'm going to do is let's see, dividend income, right? Those two terms go together. So I'm going to take my dividends out in cash and then read it backwards, capital gains. Okay, that's a gain. Capital means money. It's a gain of my money. Okay? It's not what my money produces. It's a gain of the principal sum of my money. So I'm going to leave that gain of the principal as principal. I'm going to reinvest those capital gains. You cannot do it backwards from there. You cannot take capital gains in cash while reinvesting the dividends. If you want to, I don't know why you'd do that. I'm not even going to chase the rabbit. But in any event, like I say, those are the three combinations there. And that pretty well wraps us up then for customer accounts. So we'll wrap up this video, and we'll see you then on the next one for Module 11.